Hi everyone. FuboTV participated in a conference on January 4th where the CEO and the CFO gave some interesting insights to what's going on with the company. And so I went through it and I picked out some highlights that I wanted to share with you. So let's go through them in this video here. First came a question from Jason Bazinet, Citigroup Research Division, asking about the competition. So FUBO is a streaming alternative to cable TV, and so there's others out there. Most notably, YouTube has its own service, YouTube TV, where you can get the cable alternative, and the Walt Disney Company has its alternative with Hulu Live TV. So those are the two very strong competitors that Fubo TV is up against. And so the analyst wants to know, why would customers go with Fubo TV instead of one of the other two? And so the CEO, David Gandler, jumps in and says, well, we're a leading sports platform. We have 50,000 sporting events on Fubo. And then we have features like multi-view, where you can watch multiple programs all at once on the TV. And they have the greatest number of local sports in the market. So recognition, and the recognition we received from JD Power with the highest customer satisfaction. So they have, so what the CEO is saying is that they have cool features, they have more sports, and they give customers better satisfaction. That's why customers choose Fubo TV over their competitors. And Fubo TV has been adding a lot of subscribers. They surpassed over 1 million subscribers. So they are making headway in terms of customer growth. The CEO goes on to say that people don't recognize the value of our technology stack. I mean, we are truly a product and technology company first. We have a proprietary technology stack. And this comes as, some investors, some skeptical investors have pointed to Fubo TV and said, why would we invest in Fubo TV? All they're doing is aggregating content from other providers, bringing in and putting it on their platform. Why invest with Fubo TV when you could invest with, let's say, you can invest in the Disney stock, or you can invest in Alphabet stock, which has the live TV component in there. And then the CEO saying, you know what, we're not just aggregating content and then repackaging it together and selling it. We have some proprietary technology that we've built out, and so you're not investors are failing to see that. And saying we're going to continue to be a sports first cable TV replacement service. This is what we are. We aggregate content. And beyond that, I would say the type of platform we're building will really allow us to scale globally. So right now they're primarily focused in the US. They do have some international operations with some acquisition they made of a streaming service in France. And so they do have some international presence, but it's relatively small compared to its U.S. revenue and subscriber base, and so they are in position to scale. And the good thing is that sports is one of the main things that people want live TV for, right? Everything else, you don't mind recording it and watching it later. But sports is something that you want to watch as it's happening. You don't want to watch the Super Bowl game 2 weeks later, right? Because by that time everybody knows who won the game. You're likely to have been informed of all the key plays, all the key highlights, everything that's gone on. You're already going to know about it, so it's not going to be as exciting to watch the Super Bowl 2 weeks later. But that might not be the case for if you're watching a movie or if you're watching an episode of your favorite show. You could watch it a couple of weeks later. It's not a big deal, especially if it's not a really popular show. You're not going to really know what happened in the show, what happened in the movie. So because of that, being focused on sports, if you want to generate this kind of live TV viewership, I think it's prudent to focus on sports first. The CEO goes on, we're spending an enormous amount of energy getting people to stay on the platform for 100 hours. At 100 hours and 2 billion plus data points that we collect, our ability to run hundreds of AV tests simultaneously, all of these things allow us to understand our customers and offer services. The most valuable pieces of why the platform is so valuable is that you're actually amortizing the cost, your acquisition cost, when you're able to add more services. That's something that the company's been focused on, is to get the customer in their ecosystem first, and then try to sell them on incremental things like HD, higher definition programming, or maybe more space in your DVR, or maybe some add-on package like HBO, or something else. Adding on incremental services to your package, that gives that those come at high margins, and that gives Fubo TV the potential to grow, to amortize that customer acquisition costs across more services. And then I'll finish with this final statement he makes. I do anticipate that there will be opportunities for us to add advertising. For instance, capabilities such as, if you're watching an ad for Buffalo Wild Wings, for instance, would you be able to order online given all the information that we collect? I think that would be really cool if it can actually roll out that kind of service. If you're, let's say, watching the ball game and you see an advertisement for Buffalo Wild Wings, and you have all your information on file with Fubo TV, all you need to do is click OK, purchase, and it automatically starts a purchase for you, and the food is the delivery starts to come to your home. That would be a really cool service. But how much value would that add compared to, all you got to do is take your phone out of your pocket and order from your phone? I guess we are getting extremely lazy as people, so adding that little bit of convenience, because reaching into our pockets will be too much work for us to do, to go to our pockets, open the app, and order the food. We want it to be instantly on the TV to click OK. But if Fubo TV can convince customers, train them to start ordering in that way instead of through their phone, that could be incremental revenue at high margins for Fubo TV. All right, so I thought these were some interesting insights into what's going on with Fubo TV and Fubo TV stocks. I hope you enjoyed it as well. That's all I've got for this video. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.